How you doing, guys? Welcome back. It's LSP. Before I get into the video, I just want to wish everybody a happy new year, and I hope everybody has an absolutely amazing 2023. So before I get into the analysis on the charts, I'm going to be going over some ideas, some thoughts, some things that I'm going to be considering, in terms of approaching my investing in 2023, and there's some things to consider as we move forward. One of them being CBDCs. CBDCs are something that we simply cannot avoid. Every central bank in every country is going to develop and ultimately release their own central bank digital currency. And there's a lot of mixed feelings about central bank digital currencies. Personally, I would love for them not to be a thing, because when you have a central bank digital currency that's controlled by a central entity that has the capability as being, smart money, as it's referenced many, many times, we lose control over some of the things that we want to do with our cryptocurrency. Ultimately, if a CBDC has the ability, to not allow a user to use that currency at a specific time of the day, for example, these are just purely hypotheticals. But as an example, then what are we going to do? Can you say, no, actually, I'm going to, turn that off, or I don't want that option. Can you turn that option off for me? Of course not. That's something that's going to be inbuilt or built into all central bank digital currencies, and the capability will be there absolutely 100%. So this is something that we need to be mindful of. And obviously going forward in terms of investing, I am being very, very cautious about where I put my money. I want to make sure that I focus on investments that I feel have the opportunity to outlast everything that's coming, including regulation, which we'll get into in a moment. So Inflation is obviously a problem, right? I've mentioned this many, many times. I think the lagging effect of inflation is going to hit this year. First quarter, second quarter, things I feel are going to get a lot worse before they get better. So we have to be mindful of this. Interest rate hikes, I think, are going to continue as well. Maybe they slow down. Maybe they get, maybe they get a little bit more aggressive. But ultimately, we have to be mindful of interest rate hikes. We've got to make sure that we're staying on top of this, and when the effect of inflation and the effect of interest rates, hit the market, you have to remember there is a lagging effect. It's not going to happen immediately. We see the reaction in the market because we're so close to the markets, cryptocurrency, stock market, and so on. But that effect is not long lasting. Meaning it's not triggering a bounce, for example, that's lasting for 6 months to a year or 3 year, bull run, for example. We're not seeing that. We see the immediate effect, and then it just slowly starts to go back into this bearish sentiment that's been, hitting the market throughout the entire year of 2022. So again, we have to be mindful of this. We've got to be careful. And we have to just be patient. We just have to be very, very patient and be very, very cautious about where we're putting our money, and just take our time. There's absolutely no rush to be throwing money into the market when you don't need to just yet. Now, regulation obviously is coming. There's absolutely no question about it. And regulation is an interesting one because there's so many different sort of opinions. Some people are for it. Some people are against it. I mean, I even read this article here recently about this chap who was saying crypto is like the World of Warcraft economy, and legitimizing it with regulations would hurt the financial system, says economists. Now, that's not to say he believes regulation is not needed in cryptocurrency. What he's saying is, if regulation brings cryptocurrency into light and is regulated, it's going to be detrimental to the financial system that we already have. So I read articles like this all the time, and it's quite an interesting analogy to make between the World of Warcraft economy, and cryptocurrency regulation. But this is the world that we live in, and this is the type of nonsense that we have to read on a daily basis. You've got the UK finalizing, plans for regulation of Wild West crypto sector. How many times have we seen this stupid term, Wild West? The Wild West of cryptocurrency. This is not healthy. When we see this narrative being spouted, by the news outlets and so on, it's not good for cryptocurrency. We don't need this. It's a Wild West. It's a Wild West. No, it's an evolving technology, and it's an evolving market that is in the prime moment to expand and gain mass adoption over the coming 3 to 5, possibly 10 years. So we absolutely have, an opportunity to take advantage of a lot of these things that are coming within cryptocurrency. We just need to be careful about where we're putting our money. An increased cost of living. This is something that I'm absolutely being mindful of. Before, a couple of years ago, I wouldn't have had an issue, for example, adding an extra couple of $100 or a couple of £100 to, an investment that I've got. Whereas now I'm like, yeah, do you know what? I'm not going to do that just yet. I'm just going to wait just in case, because I'm cautious that inflation is still a problem. Interest rate hikes are going to create and make that problem worse. Regulation is going to be an issue. The cost of living is going up. So we have to be careful with the money that we have. We don't want to just keep throwing money at the market. And if we do, make sure you're doing it in something that you absolutely have confidence in and that you're going to leave for, minimum 1 to 5 years, over time, because ultimately we want 2023, the beginning of 2023, if you've got $1,000, by the end of 2023, you want that $1,000 to be more than $1,000. Even if it's $1, you want it to be more, right? Using savings to pay bills. People are already doing this. They were doing it last quarter of last year. I know people who've taken money out of their investments to pay their bills. This is a problem. This is a big, big problem. Something, again, that we absolutely have to be mindful of, because the more people sell their investments and the more people draw on their, on their savings, on their investments to pay their bills, the more it's going to affect the markets. And again, this will be a lagging effect. We're not going to see an immediate effect of this as it happens. It's going to be lagging, and it's going to take time for this to actually finally hit the market. And when it does, I genuinely believe we're going to get this next downturn at some point in the next 3 to 6 months, and as we move forward, in 2023, we'll see the above affecting markets, and we need to make sure we stay on top of those effects to take advantage of opportunities to come. I'm going to be making videos. I'm going to be going over a lot of different content, on my YouTube channel. I'm going to start to talk about some of the sectors and some of, some stocks, some sectors, some ideas on at least where I'm potentially considering putting, a little bit of money, some of the ideas that I have in terms of investing, in 2023. And as is always the case with me and the content that I deliver, I'm trying to do it in a way that is both non-biased but also educational in nature. I'll be continuing to trade the NQ and building the challenge account. This is something, if you want to see that, I'm going to be continuing with the live streams probably next week. But this is going really, really well. We're up around about 5.5%, on that account at the moment. And again, going to be continuing to do that. So this is going to be an interesting challenge. I'm also going to be delivering content on what I'm looking for to invest and add to, as I mentioned previously. I'm going to do a heavy focus on my YouTube channel, which will deliver relatable content, how-to videos going over trading, and investing. And I just want to quickly say as well, if you find value in the content, please consider subscribing, because it's not just that it helps the channel. My biggest challenge in terms of YouTube, social media, and getting my message across is getting people to understand the boring content that I deliver, or in some cases, some of the boring content that I deliver. Most people don't want to hear that. They want the hype, they want the jazz, they want the so on. But those who, kind of stick around, people who are in my Discord and, the kind of conversations that we have very mature investors and thinkers that are trying to make their lives better and that are trying to expand, their portfolio in a way that is both safe and actually makes sense. And when I read, for example, what happened recently with FTX, and you have people like Andre Drake, you've got Graham Stephan, you've got some of these other people, huge YouTube channels that were promoting FTX at the time. Although at the time it sounded, and this is something that I won't do because a lot of people have said, they shouldn't have been doing it. I'm not here to say yes or no or whether it's good or bad. The reason I'm mentioning this is because people like Andre Drake, for example, that were promoting FTX at the time were doing so while FTX was solvent and doing well. So it's very easy now to say, well, they shouldn't have been doing it. But ultimately, it was irresponsible in a lot of other ways. And this is the point that I'm trying to make. I want people to understand there is a safer way to look at investing. There is a safer way to look at trading. And there's absolutely a safer way to look at the opportunities that are going to be coming in 2023 so we can capitalize on those safely. We don't need to take advice from YouTube channels when we can clearly see it is purely hype. Unless you can verify something, and actually look at the content that is being delivered, and say, okay, this kind of makes sense. I'm going to go and verify it myself and have a look into it. Then it's just pure hype. You don't want to be getting into something right on pure hype. We want to make sound, logical investment decisions that are going to turn our portfolio into something stronger by the end of 2023. So, excuse me. So, let me just quickly go over to Bitcoin, and then I'll go over to Binance, and then we'll kind of wrap things up for this video. So we are, as always, kind of sitting around 16,844. We've been kind of grinding in this area for quite some time. And ultimately, as I've said last year, and I continue, the same theme this year, I do believe we're probably going to end up down at 11,655. This is something that I've, felt very strongly about for some time. If we look at the daily chart, we can see that last impulse to the downside. We had a little bit of a run here. This was just a liquidity grab, and obviously that's reversed, and we've just been going sideways ever since. We need to see a little bit of movement in the market, and this may start to increase this month as volume starts to come back into the market, as we get more market participation, and as news hits the market about various different things. So it's just a question of being patient and waiting. It is possible that Bitcoin may run up a little bit first before it goes down, but I believe that this sentiment and the underlying tone is still very, very bearish, and I'm expecting lower prices on Bitcoin. So I'm just being patient and waiting. And the same applies for Binance. We're getting a little bit of a run on Binance today. We should just go down to the daily chart so we can see what this looks like. Again, impulse, this was the FTX potential buy. That was the failure of the buy, or the acquisition in this case. And then obviously we had a little bit of a run up here, and then it's just reversed all the way down. Mini capitulation, and now we're just kind of grinding sideways with a little bit of up movement today. Now, we've already dipped into this area of liquidity down here, right? But we're within a overall bearish tone, right? And the reason that Binance is showing a little bit more strength from time to time relative to Bitcoin is because there's a lot more going on with Binance at the moment. Now, Binance is the biggest exchange in the world. They, have a lot of things going on. They are in the process of showing, through audits and through third-party audits, right, that their, assets are safe, and that it's one-to-one, and that investors can pull their money off the Binance Smart Chain anytime they like. People at the moment still have faith and confidence in Binance, and I believe that is going to continue. But I want to be very, very clear about something in particular. There are a lot of projects that are on the Binance Smart Chain, and if Binance takes a huge hit, whether it's something negative or whether it's just purely based on market movement, every project on the Binance Smart Chain is going to be affected by that. And this is why I was saying last year, in the first quarter of this year, January, February, March, let the market settle. If it runs to the upside, fine. Let it run to the upside and prove that it is putting in a bottom, that it wants to show movement to the upside, and that's going to continue. These movements that go up and then people get excited and then they just reverse, they hurt people. You get in, you think this is the one, and all you're doing is you're just adding to a position that isn't going anywhere. We need to see full capitulation. We need to see something hit the market where we see price just drop like a tank, really put in some serious liquidity, numbers in terms of just, dry up of liquidity, full capitulation. Then we get that final bottom that's been put in, and then we can start to move back up to the upside. And I absolutely don't feel that that's happened just yet. I do feel that that's still coming. And although I'm not going to say Binance will end up at 148, this has been on my chart for a very long time. And if we get that sort of secondary move up just now, so we've had, the drop, the first rally, the second drop, second rally, and then we get that third drop, we're just going to continue bleeding. I do think we see 200 and possibly as low as 150 to 148. So I know the video was a little bit long, but I wanted to go through quite a lot of content today. And as always, I hope everyone's having an absolutely fantastic day or evening wherever you're in the world. And I look forward to speaking to you in a future episode. All the best. Take care. Ciao for now.